Hey guys, it's Xavier here from North Harbour, and today I'm joined by Brendan from C Finance, and we're going to talk a little bit about property investing, and in particular property investing on the north side of Brisbane and in areas like North Harbour. So Brendan, just tell me a little bit about the kind of climate we're in at the moment with property investing in the lending world.
Yeah, well, in the lending world, and I guess even more specific to the timing where we're at, Southeast Queensland 2020 now, it's very interesting where we've got low rates. We're in the low threes now for investment rates, and so when you look at suburbs in the Southeast Queensland corridor, some of these rental yields are still at the 4.5% to 5% range. So if you're borrowing in the low threes, 3.1, 3.2 for an investment loan, sometimes interest only, but you're returning 4.5, there's a good gap there to either be paying down your investment debt or using that as cash flow for lifestyle. So timing is quite an interesting thing from an investor, but also from a broker. Looking at it going, well, I do think it's a good time to be looking at investment opportunities in both growing suburbs and suburbs that are returning each week as well. So North Brisbane in particular is quite interesting from a numbers point of view, where you can buy in the fives and still look at that 4.5% yield. So we're looking at a good gap between your borrowing costs and your actual return.
So a really good chance to get some positive cash flow in a lot of these investment properties.
I think some of these properties in the North Brisbane corridor, we're seeing still fours and sometimes fives, and not even particularly talking about dual locks, that can be higher. But some of these interest only loans that are out there with lenders like First Mac, they're at 3.15 right now. If you're borrowing interest only 3.15 but have that gross rental yield, you can then choose to make the extra payment, choose to then use it for the next property. But we do see that low interest rates are going to be around for a while yet. So some are saying 12, 24 months, but again, the investment decision specific to the North Brisbane region, I think it's something that I'm seeing a lot of our clients considering buying that extra property in the area.
Yeah, great.
So,
and what do you think it is about North Brisbane and communities like North Harbour that attracts a lot of investors to purchase their next investment property or their first investment property?
Yeah, I think overall investors are looking at a range of things. They're obviously looking for the return, but they're looking for factors that drive that return. So we're all looking for quality, and we're all looking for places where people are wanting to live, to be able to maintain the yield, to be able to look at this particular development, particular house, to go, all right, we're buying a good quality investment that's going to attract a good quality tenant that's going to continue to pay high rent. So North Harbour fits a lot of boxes. We have proximity to Brisbane, we have proximity to infrastructure with trains and schools close by, and we're not too priced out yet. We're still in the fives here. Mid fours to mid fives can get you a decent quality home that still has a decent rental yield. By the time we move towards the city, in the inner city suburb of Hendra, you're in the 7, 8s and 9s, but still only seeing a 3% yield. So the further north that we are, I'm seeing more investors come to that area. But specifically relevant to North Harbour is that we've got a good quality estate here, I think. Looking at the way in which it's built, the streets are wider than other streets. The percentage between owner-occupiers and investors here is quite different. We have a lot of owner-occupiers which are by nature going to care more for their properties. So the street appeal on these houses are going to be that much more attractive than an estate just full of investment product.
Yeah, correct.
So I think North Harbour has some definite strong points, being proximity to the highway for work, quality of the estate, then also down the track, obviously we're all excited about the day in which the canal will be approved. But right now I think it's still priced well. The land pricing hasn't crept up. The developer here has kept their pricing fair. So I do think we're still not outpriced and the yields are still going to be there.
Great.
The taxation benefits with buying new is still there. The Liberal government's now in play and is in there for the next 3 years. If the Labor government had gotten in April, we would have been having a different conversation. But right now it's still a great environment. The policy is still in place to be able to utilise depreciation, to be able to reduce your tax. And then again, what we're seeing is too, once we can structure one or two of these for our clients, the more cash in the door, the easier it is to get that third loan for the third investment property.
Yep.
So I do think if we can line up the yield, we can look at the capital growth benefits here, and also combining it with the new house built in the last couple of years, or off the plan. Basically the investment strategies we're tailoring in with these accountants and financial advisors to be able to create the best outcome for the client.
Yep, fantastic. So beautiful. Okay, well, thanks for that, Brendan. We'll wrap it up now. And if you'd like to know more information about investment properties here in North Harbour, please visit us www.northharbour.com.au.
Thank you.